Good morning, traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, October 13th. Good to be here with you guys this morning for our final webinar this week. So, the dollar rally continues to ramp on, really clearing the way yesterday with a continued higher close here on the DXY. Today, you're seeing a little bit more of a split performance, a little bit more of a pullback here in the dollar-yen cross. You can see that the yen is actually the highest performer versus the dollar today. So we'll go over the euro-dollar, we'll go over dollar-yen. Euro-Aussie did respond to that key support that we were looking at. That was a welcomed reversal. Kiwi-CAD continues to hold the key range we were looking at. We'll take a look at that. Obviously, Aussie dollar and Kiwi dollar. We do have some event risk for the U.S. heading into tomorrow. Okay, we get the release of the advanced retail sales, University of Michigan confidence surveys, as well as some commentary that's coming from Yellen. Chair Yellen will be speaking at the Boston Fed conference tomorrow. So you do have a little bit of event risk. We'll be watching these dollar crosses as well. And obviously, we will take a look at the commodities. Conwall says, please, commodities first. I want to short, but without your bias, not possible. Conwall, we'll take a quick look at the commodities first for you. No worries. I do want to prompt you. I'm not really too crazy about the short side of the metals from here. You're basically at a key support. Crude, different story. I might think you might see another low there before it turns higher, but we'll also take a look at that for you. No worries. Puja, we'll take a look at dollar CAD for sure. All right, any other pairs that come up or different trades you want to take a look at, guys, feel free to post it on the message board at any time. All right, so again, relative performance heading to the US dollar. Here's what it looks like. Aussie, a little bit of a decline there, down 0.12%. Again, that one still has the possibility for a little bit more of a rebound. I was stoking this out for a near-term short trigger, a little bit higher from where we are right now. So we'll go over that. Pound crosses, as I noted in yesterday's piece, still kind of off limits for me, guys. So, I mean, if we get some near-term price action that starts to look a little bit cleaner, maybe, but for the meantime, pound crosses are kind of off the table for me. Kiwi crosses remain very interesting, both the Kiwi dollar and the Kiwi CAD setup that we highlighted earlier this week. As far as event risk is concerned, do keep in mind that you have crude inventories on tap at 11 o'clock today. We did just get the release of U.S. Continuing claims coming in a little bit better than expected. But really, it's going to be the 11 o'clock print. Keep your eye on this for both the crude trade and dollar CAD, specifically for you, Puja, as well. 11 o'clock. Remember, we got the release later this week because of the holiday on Monday, so that's why we're getting the crude inventories today. All right, let's jump right into the charts. Before we do, real quick, here's what the U.S. docket looks like tomorrow. So you're supposed to get retail sales coming in at 0.6%. This is off a nice snapback. We got a contraction of 0.3% the previous month. So do keep your eyes on those advanced retail sales. Also, University of Michigan surveys, which climbed to 91.2 last month. It's supposed to climb even higher, 91.9 here. And that's released at 10 o'clock tomorrow. All right. Can I request a look at Euro Pound? D, we'll take a look at Euro Pound for you. No worries. Again, not my cup of tea right now, but no problem. All right. So before we get started, here's what the dollar index looks like. Here's the DXY. Again, major breakout of the major key resistance that we had talked about, 97.23, 97.26, high day close, 618. That's your near-term support at this point. You're kind of in no man's land here. I still think you climb higher inevitably to test that 98.48 level, the 2016 open. But it is what it is. If you're trading the Dixie specifically, there's really nothing to do from here. You'd be looking for either another pullback towards that 97.20 barrier with obviously our bullish invalidation down at 96.82, or you'd be looking for a stretch into the 2016 open for a possibility for some exhaustion there. Big resistance, 98.50. 98.69, this region here. So this is just a parallel that was added on. I just was looking at this earlier today. This is just a parallel extending off the lows that you made from March of the same slope. And if you tack it onto the lows there, you can see resistance, resistance, perfect resistance, resistance, pivot, and that converges on that same region over the next few days. So levels are clear. On the Dow Jones FXCM dollar index, a little bit different of a picture. You're kind of struggling here, but you're still above that 12,170 barrier. So looking at this as near-term support, obviously we closed above that again for a second day yesterday. A couple of median lines gives us room for a little bit more of a pullback into the lows basically that you made yesterday. But again, in overbought territory, don't want to start calling this unless we see a 70 break. So sort of the same picture, although this is a little bit closer to support here on the Dow Jones index. Any questions on the indices, specifically on the dollar, before we jump into the crosses here? Again, a mixed picture at best because things are getting a little bit skewed off by the sterling. And on this index specifically with the equal weighted averages of both the euro, Aussie, sterling, and yen, a little bit easier to understand why you didn't see such a major breakout as you did in the Dixie. Okay, into yesterday's report. Here's what euro dollar looked like. And I think I was talking with D earlier, right? It says, yep, it broke, but it didn't stay down as far as the near-term resistance that we had highlighted at 110.09. I was still looking for a rebound off this until late last night. I was trying to get a long trigger. I didn't get the opportunity. It did slip below briefly, but we're right back above at this point. You're seeing a nice little rebound in the euro. Basically, it's a basic 786 retracement from the ascent off the post-Brexit low. Okay, so a basic Fibonacci ratio. But also on the near term, you also had some slope support coming right into that region. So the focus was on this 110.09 barrier, and basically you're looking for a possible rally towards 110.66, 110.85 for possible short entries. You have the median line for the current operative slope to the downside, and you have this embedded slope that we were following since, well, a few weeks ago, all converging on this region. So basically the risk was for a near-term rebound off this level to try to get back on the short side. Here's what it looks like now. Daily chart, obviously you saw that slip below. Here's the 2-hour looks like. All right, so it's been a little bit of a tough call. Note that I was highlighting this yesterday, divergence in momentum. That divergence is still holding. It's basically this. Opa. Okay, so you're basically continuing to mark some ongoing divergence into the lows. You made a big old reversal candle here, which is faltering now at the range highs from Asia. So this is sort of near-term resistance. On a break higher, this is the area of which you'd start to look for exhaustion for the near-term rebound, as well as some entries here to try to get back short. Ultimately, I want to see this thing down in 109.40 area, 109.36, this region here, 109.30, 109.36. Big fib confluence and median line support. But near term, so D, if you're holding a longer term position, which I think you were talking about some longer term crosses yesterday here on the webinar, but I really wouldn't be concerned unless we start to mount a rally passing 110.85. If you start to get above this, I'd start to get a little concerned. But focus remains lower, sub 10.85. So I'm still looking for rallies to sell, short triggers and momentum. And again, if this divergence resolves itself with a break here, look for continuation. That being said, I think the near-term risk is still for a little bit of a rebound here, higher into the U.S. trade session. Questions on euro. Levels are pretty clear. Finally, euro getting some play here. Okay, we'll take a look at Euro Aussie as well, which is a setup that I highlighted couple of days ago. We'll go over that, but before we do, I just want to touch base on dollar yen and what that's doing, because dollar yen actually is just continuing to follow this ascending median line formation with such precision. So yesterday we were talking about this in the report, saying, look, 104.47 was our last target. You have a major key level of resistance just a little bit higher at 104.86. Now it's littered with a whole bunch of median lines. Let me bring up dollar yen for you. So I'm thinking again, heading into last night, I'm thinking, this thing could see a little bit of a snapback, could see a little bit of a messy reversal, because you have the 50 line, or the 75 line rather, excuse me, of this current operative slope, so the buy sector. You have a key 618 retracement. This is from the decline off the highs. Okay, and then just above that, obviously, you had a longer term slope. You had a longer term slope off the lows. That was backed very closely by the 100% extension. So I tried to warn you yesterday, look, kind of looking away from getting into long exposure from here. Look for this setback off these levels to see if you can get a little bit of a pullback here to possibly get back on the long side. That pullback coming right into 103.54, okay, which is right here. Rally again, faltering here a little bit, and we're right back at that sliding parallel off the weekly low. So this is just taking into account this week's price action, within the confines of this entire multi-week ascending formation here. So really clean on the price action, right? Not so clean on the momentum triggers, not going to really stress that at this point, but what I wanted to warn you is this. If we start to see further dollar pullback or further dollar weakness, which I suspect we may, you could get a downside break to test again the weekly open, and this is my near-term bullish invalidation level. If we get a break below this, I think you'll probably see a reset down towards 102.80, maybe even down as 102.30 before we start to snap higher again. That being said, I'm still looking constructive above 103.25 in the near term. All right, the actual play in this yesterday was to actually pay the pullback. From here, if you're not holding shorts, you're looking for support around this region. If you're looking for, if you're holding a short and trying to close that out, this would have been your first area down at 103.55 or so. Next target, I'd start to shave off and clean off that position heading into the weekly open. If we get back above the median line off the lows here, look for continuation into that 104.86 level. And that's really the last major target to the upside before you experience a much larger breakout. Here's dollar yen. Okay, this is the same daily chart that we published back on the 11th. Okay, and this is the region of resistance we're checking right now. Any questions on dollar yen? Okay, those were the two updates from last night. I want to jump into your questions real quick. I didn't forget for the commodities real quick. We're going to take a quick segue just because Conwell looks like he's looking for positions here. I'm going to start off with oil because this is the one I think that there's going to be a lot more commotion. You have oil inventories coming out at 11 o'clock. Look, you're still constructive above this region here, 48.97. Bullish invalidation, or let me take that back. This is going to be our bullish invalidation. Okay, if we break below 48.97, don't look for any more long exposure. The level that would put me bearish, that would want me to be straight up shorting this thing, would be a break below basically the opening range high from last month, so 47.75. That would necessitate a break below this median line longer term, again dating back to 2015, and certainly would shift things to the downside here for crude. That being said, key support still 48.97. And a topside break, you're still looking for that rally towards 52.50 and 54.30. Now, a couple of things that's just kind of jumping out at me here, Conwell, is it looks like, it's ugly, but Looks like that's something you want to pay attention to maybe later today on the close. See if we actually make a trigger break here. Keeping in mind that here you're getting some divergence. Okay, price action making a higher high. Look at my cursor to the bottom of the screen there. Okay, price action making a higher high, the oscillator making a lower high. So when these are followed by trigger breaks, typically I tend to pay attention to it. That looks like it actually might have already broken. So just keep your eye on that. Might be a little bit of an indication that near-term momentum is waning. In such a scenario, again, you'd expect this slow meltdown here to try to test one of the major supports that we've been following. One other thing I would do, just for the sake of giving ourselves some room here, is extend a sliding parallel off that low. Yep. Like so. Okay, give us a little bit more room. Okay, now taking a look at this at the near term, because I know that you've been intraday trading this, Conwall. Here's what we were working with last or yesterday in the webinar. Here is sort of what we were targeting actually on the pullback. It came right into that, broke, held as resistance. Here's the weekly open. It held as support. On the way up, look where we're finding some resistance. So I would be looking for still a possible slow melt lower, 48.60, 48.79 here. Might not be a near-term target if we continue to move lower in crude. Let me just take a look at what this looks like. Could be something to consider, but again, highlights resistance right here anyhow. Conwall, here's the 2-hour chart I'd work with for now. Okay, watch those inventories coming out at 11 o'clock a.m. Eastern here in New York. So crude was number 5. Just a quick segue into gold and silver. There's not really much to say on either of these. Conwall, here's the, well, specifically on the near term, there's not really much to say, but here's the only chart that I'm really paying attention to as far as gold and silver. Huge level here. I do want to again bring your attention real quick to the weekly chart that we highlighted earlier in the week. Really important to keep in mind where the broader trade level is for gold, okay? You're not really at long-term structural support. You're not really anywhere near long-term structural resistance. That's a little bit lower in my mind, looking towards 1235, 1210. Now, before we get there, you could see a little bit of an interruption. Take this back, back towards 1280 first. I don't know. All I do know is that we're not at a major support just yet for the gold trade. Here's what it looks like again on the near term. So from the near-term prospect, I'm looking at this median line formation, which is the same slope as this, okay? But it's using 3 different reference points. And when you find that type of parallel, when you find that kind of symmetry, it's something to pay attention to. So you're seeing that support, which confluences with a basic 38.2 retracement of the entire advance, giving us a little bit of a cushion here of support. The upside for the last couple of days has continued to be governed by the 200-day moving average. So there's really nothing to do here, Conwall, until we finally clear this range. 1250 is support. I'd want to call it into 1263 as resistance. Broader risk remains for a move lower for sure. But this is really sort of the barrier of entry you need to get through to see that continuation. Looking to target 1220, 1230. Was that level here, 1234? And then I'd be looking for that drop a little bit more key of support region down into 1200, 1205, 1210. Hmm. Um, yeah. I actually want to see what this looks like. Bear with me one sec. Huh. Okay. So if we take that same parallel, I know this looks messy here. Let me just zoom out real quick. If I take that same parallel that you're looking at right here, okay, and you just move it to the actual stretch high that you made right here, there's support, resistance, support, and that coincides a little bit higher near 1220. So this whole region, let's just light it up, you know what I mean, would be where I'd start to look for a possible exhaustion here on gold. Other than that, um, you know, near term, you're just simply in a very, very tight range. All right, any questions on gold? Not really worth spending too much time on. Similar scenario with silver. Silver is also at support, basic support on this one. A little bit cleaner of a level in my opinion. You're looking at a basic trendline support just extending off of this year's low, specifically here from January. With momentum, not much divergence, not much of anything. Not much of a range here, although you're seeing a little bit more of a triangle consolidation pattern. So watch the lower extremities at the 200-day moving average, excuse me, that's like 1717, 1718, and resistance 1785 is still kind of the major level I'd be looking at. Larger story or larger picture remains bearish sub 1843. No change to yesterday's levels here on crude, or excuse me, on silver. Any questions, Conwall, on the commodity blocks, or anyone here in the room? Silver was number 7. We are making good time here. Hey, you're more than welcome, sir. My pleasure. Always good to see you in the room. All right, I want to take a jump back into the previous couple reports. We'll touch base on Euro Oz, on Kiwi CAD, and then we'll jump into just the dollar crosses and give you a nice wrap up heading into the end of the week with obviously some of that U.S. data on tap tomorrow. Kelly, great seeing the room. Kelly says, hello, friend. With a strong yen, it will help the signal. Um, it'll help the signal your guys put out on the Aussie yen. I did get filled at the level SB put out last night. Thank you, sir, and more than welcome, Kelly. I do like that trade near term. I was just speaking with Jamie about that. Kiwi Dollar, if you get a chance, Mike, thanks. Yeah, Mike, we'll definitely take a look at Kiwi Dollar. I have it on the list, brother. Let me jump through this real quick first, and then we'll actually take a look at Aussie yen if you guys want. Don't necessarily have some near-term levels as clear as Jamie on that, but we'll take a look. First things first, Euro Oz. So here, my friends, is what Euro Oz look like on the 11th. Where art thou? Where art thou? Here we are. And the basic play here was, look, it made a basic break objectively of the weekly opening range. You're looking for a downside move. However, major critical support lines all up near 145.48, 145.50. The basic 786 retracement of the advance from the yearly from that well, I guess that was August low. You have basic trendline support extending off of the December low. You have basic trendline support off the August low. And you have the objective monthly opening range low. There's so much there. So the play was look for a rebound off that level. With the same respect, it's the bullish invalidation. So if it breaks below, sayonara. Okay, you're looking for like 144.30. You're looking for 143.50. Well, we came right into that region. We saw a rebound. We talked about that initial move yesterday in the webinar. And guess where the rally found resistance? Right back up at that former 618 retracement, 146.65. Here's what Euro Aussie looks like right now. So these sort of sometimes can be your best scalps in intraday plays. Just play the levels as you see them come. So quick picture there, that was a 60-minute. Let's bring back the 60-minute here as well. All right, so that's all good and dandy, Mike, but what does this mean for price action from here? Well, here's the deal. I'm actually looking for a little bit stronger of a rebound. So I do think you could probably get in a couple of downside plays against 46.65. Wouldn't necessarily be interested in taking it from here. If we do get a move back towards 145.50 and I can take a stop against this low, be more than happy to try to press that again. No change, though. No change to where we were early in the week. At the end of the day, this is still our bullish invalidation level. So while above 45.50, 45.40, you want to be mindful of any type of short bias because that's a long-term trend line. And even if you take a look at this on the daily chart, just really objectively, look at where momentum found support, 40, 40. And this is something we want to pay attention to. So I don't want to necessarily stress this line anymore. It was kind of just highlighting that key region. We got the reaction we wanted, so I'm going to go ahead and dump that and kind of just stick in line with the major trend line here off the December low. 1 touch, 2 touch, 3 touch, false break, 4 touch. Is this going to hold? We'll have to see. Now keep in mind one other thing I do want to note is within the confines of that region where we just kind of petered out in the highs, look what we have. The monthly open, those are the purple dots you see here and the dots you see here. And the weekly open comes just higher. So in any event, if this thing clears this 46.65 range, which was the exact high we kind of capped out at last night, look for that push through 46.88 to really validate the reversal. 47.67 and then up into 48.28. Any questions on Euro Aus? Okay, that was number 8. Moving right along, Kiwi CAD. Quick look at Kiwi CAD. Haven't had any plays on this personally. Well, since the first day initially that we brought it up. Here's what it looks like. It's kind of been a back and forth jackknife, real chop fest. The levels are clean, but you're just not getting that continuation play that you would look for on a kind of recovery, which tends to tell me, again, that things are still pretty heavy here. So remember, the broader downside bias still remains intact well below 94.33. No disputing that. That's the yearly open. And the major key support that you still need to get through is still that 93 handle. Here's what, big stuff is all lined up here. This is kind of why we start to look for the rebound early in the week to begin with, was just because of this confluence region of support. You're looking at the 38.2 basic retracement, but this takes into account the entire 2016 trading range. Nice slope or median line extending off the lows there. Resistance, support, support. The 100-day moving average, and of course, just basic down channel support here. So on the near-term chart, if you guys remember this, we were looking at this slope, and I remember when we broke earlier in the week, I said, you know what, I just kind of want to keep it on for now. Here's the channel. I know it's a little bit messy. Here's the channel that we're looking at in the daily chart. But you can see that former slope support has been kind of really clean resistance so far. So maybe one break higher here, and again, I'd start to look for short exposure heading into the yearly open. At the end of the day, a break below 93 is really what you need to get to clear the way for a larger decline here. So a little bit more of a wait and see. I'm treating the Kiwi CAD here as just as a basic opening range in and of itself. So keep that range bound until we clear 93, or we get a little bit more of a rebound and an opportunity to try to get back short at 94.30. Any questions on Kiwi CAD before we move off? That's number 9. Okay, some of the major dollar crosses now. Let's hit dollar CAD first here for Puja, and then we'll come back to Aussie and Kiwi. So dollar CAD will be number 10. Pooja, I'm not really looking at dollar CAD near term. I do like the short side. If you guys remember, I was talking to you about a couple of scalps I took earlier in the week on the short side. It just hasn't been able to really materialize yet, and this thing just continues to bobble into that high at 32.96 again with a failed attempt last night. Here's the weekly open as near-term support. Play this consolidation sort of wedge formation until we get the breakout or the breakdown. I still have key support right at that 236 retracement, monthly open, 25 line, 25% line here of the same slope, all converge down here at 131. Here's a look at the daily chart. Look for, I guess this would be the first area of near term, a little bit more of a critical support barrier I'd be looking at. So that's the August high day close. But more importantly, it is the 200-day moving average as well. And that would necessitate sort of a break of that low that we made yesterday. So maybe a break below this would kind of get you going, but it's really 31 monthly open that we would need to see as support. Dollar CAD, I'm holding a short from 32.95. Wow. Pooja, you literally caught that level. It was a beautiful entry. Very nice. Yeah, stop against the higher. A break even for me, I would be assuming at this point. I do like where momentum is. There's that trigger that we've been watching. You've already got like 4-point touch off that. So if we get this break, maybe we can materialize this turn. I feel like we've been trying to wait for this turn in dollar CAD for a month. It looked like it was starting here mid September. It looked again towards the end of September like we were finally going to get it. Maybe now that we're giving up, we'll finally start to see it turn. Pooja, does that help? Anything specific I can give you a little bit more help on with this? Says yes, thanks. I'm more than welcome. More than welcome. Again, awesome entry. Awesome entry. So, in fact, the dollar CAD levels, I think, were also the freshest here on the 10th. Ah, yes. So yeah, those levels haven't changed. All the same, 31.88 on a, or 31.82, 33.82, excuse me, on a breakout. 32.95, that was your entry, really nice. 31.17, yep. No change. So the update from the 10th still has all the same active levels here on dollar CAD. Was just wondering whether to hold or get out. So Pooja, depends on what your objective was on the trade. I mean, for me, the initial exit on the trade would have been at the weekly open for a portion. I always leave a little bit on. A lot of my trades, guys, probably say like 75% of them, at least maybe a quarter or a little bit less, get stopped out at break even. Just because I try to leave some on the trade, especially if I'm trading with the trend. So we're trying to call a high here, right, Pooja? So it might be a little bit more prudent for you to shave a little off. If it breaks lower, great. If it doesn't, have your stop at break even or better. But the initial target for me on a scalp like this would have been the weekly open. Next secondary target, right back at 31.95. I just basically take it at 32. Make sense? I've taken most of the trade, but was looking for lower targets. Thanks a lot. Hey, more than welcome, Pooja. Nice job on that one. Conviction in the levels. Love it. Love it. All right, so that is dollar CAD. Again, crude inventory is coming out 11 a.m. Eastern. Do keep your eyes on that. All right, let's jump back to the Aussie. That'll be number 11 for the session. Here's what Aussie dollar looks like. And here's what the latest Aussie chart looks like. Oops. Okay, so we came into the week highlighting 74.45 as sort of a big support confluence region that you want to look for on the Aussie. Here's what it looked like on the intraday heading into the start of the week. We got a nice drop right into that level, a brief stint break higher, and then we reflected off of this parallel, which has obviously offered some nice inflections. Support, resistance, support, support, messy support. It was messy resistance. We came and turned right ahead of it before moving lower. We're still broadly respecting, okay, this slope. In fact, if you take this same slope and extend it right off the lows there for the week, the opening range low for the start of the week starting on the 26th of September, kind of catches the lows pretty darn nicely here. Oops, that's not what I meant to do. Like so. So, near-term resistance, like I said, a little bit messy on that same slope, but that same inflection offering a nice pivot nonetheless. And from this point, again, like I said, I'm still scoping out looking for a short entry. Here's what the chart looked like. I was looking at this earlier right before the session. It actually would have been a decent scalp just off the highs here, okay? You're looking at price action basically essentially rallying into that high. The start of the U.S. trade session failed to even go for a test there. Then you saw a first 60 break basically since the start of European trade. So the 5-minute chart was showing some weakness. Also, you had some divergence both on the 5-minute and the 1-minute. Price action making higher highs, the oscillator making lower highs. So I actually was looking for a short trigger here, but long story short, I think you might get another rally into the U.S. Open. If you do check 75.70, 75.73, I would again be looking for possible near-term exhaustion there. So that's sort of where I'm looking with the Aussie here. Also, when you get a chance, Eileen says, can you talk more about the London fixed time around 11 a.m. Eastern? Ever any opportunities around that every day? Any way to plan for it as part of a strategy? Here's what I would say about the London close. This is the way I play it, Eileen. I actually, if I'm in a trade, here's the consideration. Let me put this in an easier way to explain. The consideration I take. If I'm in a trade and the trade is going into my direction, or I'm in the trend, or I'm in the trade and it's working out, typically I'll wait right into the close of the London trade because a lot of times the move will extend right into the close and then you'll get the pullback. So when I'm in an open position, a lot of the times, even if the market's kind of moving laterally or kind of just meandering, if I'm in the money, a lot of times I'll just wait to the close of London because the markets will just jam that price right into resistance and then start to fade that move. With the same respect, Eileen, as far as looking for new opportunities, a lot of times the extremes will be made into those London fixes. So if Aussie dollar, for example, continues to kind of meander higher into the London close, then you get a jam up into that high, that actually a lot of times will be a great opportunity to try to fade that move for a near-term pullback. So there's two ways of considering how to approach the London close. And that's something that we talk about, right, with the crossovers. And a lot of times that fix around 11 a.m., a lot of times 11:30. I think the London market close actually comes in at 12 now in the U.S., if I'm not mistaken, with the time zone there. But in any event, that's how I want to approach it. I wouldn't necessarily plan a strategy around it. And remember, the technicals are always guiding everything we do. But when price is approaching resistance or support around those times, those are the considerations I'll keep in mind. Does that help? Oh, okay, cool. I think end of month time goes to noon. Right. Okay, cool. Speaking of fixes, which is more influential, the London fix at 11 or the New York at 10 a.m.? I would probably say the 11, in my humble opinion. At least that's what we've been hearing about it hit the wires here in New York. Yeah, more than welcome. Any questions on Aussie before we move off here? Levels are pretty clean. Still scoping out short positions here. I would be cautious about getting too aggressive because I do think the veracity of this reversal and the divergence that you're seeing both in longer term momentum, this is obviously a 2-hour chart, does suggest, excuse me, that we could be seeing this start to materialize into a little bit more of a reversal or rebound, if you will, before we move off. So watch that 75-70 barrier. I'm still going to work with that same pivot. Okay, next up on tap, Kiwi dollar. Here's what Kiwi looks like. A bit similar of a situation in that you're marking all this divergence into those lows. Again, it's been a chop fest for the last couple of days. Here's what we look like on the 10th with the Kiwi dollar. The levels have been pretty good. Once we mark that break below 71.18, that's what really validated the short bias. We've taken out 70.86, we've taken out 70.50, and that's sort of where we're staying right now. Former median line support, extending off the lows here from the 13th of September, been offering really good resistance. It's 3 tags over the last day or so that it's been holding. But you're also marking divergence, so momentum is getting a little tired. So I'd be looking for a break of this near-term range while noting and considering that we are coming up on median line, basic trend line support. So maybe one last jackknife into the low and then a quick reversal snap to get back on the short side, looking for a move into the subsequent downside break, which would be the Brexit lows, a 1618 extension. The targets are really clear. It's just that I'm hesitant to get into any fresh short exposure while above this trend line. With the same respect, I don't want to try to play a rebound just yet. Momentum has given us divergence. We don't really have any price action that looks constructive, both on the near term or sort of the 5-minute chart. Let's see what this looks like. Oh, it's your first hold of 40 support and momentum. Support and momentum. Yeah, so you could see a little bit more upside here before it turns over. I'd be looking for possible short entries if it does break, by the way, near 71.80, basically this median line. In Kiwi dollar. 69.70 looks strong support. 69. Yeah, so 69.70 is a big region, D. I'd be saying that for sure. It's the Brexit low. So on that low that you made for the swing during that crazy session, he also held it broadly, I would say, as support in July, and it's backed closely by a basic and objective 1618 extension from the decline off the highs. So that'd be the next sort of, wouldn't say it's, I'd be looking for a reaction there. Let's say that, D. If it breaks through, I'd be looking for a tumble, a real strong breakdown. And with the same respect, even if we break this median line or this basic trend line, this might be sort of an exhaustion play. Maybe look for that rally to find resistance back at that former support, and that would be another possibility for an entry for a move lower. But I would definitely be looking for a reaction here. I wouldn't think that we would spend too much time there. If the market comes in there, you're either going to see a strong rebound or kind of just a breakdown. And remember, as we always know, a break to the downside of a descending median line formation typically sees the strongest and sharpest moves of the decline. So there is sort of a lot riding at 69.70, I think, over the next couple of days for sure. Does that make sense, D? All right, that's number 12. Yes, thanks. She says, all right, cool. All right, so if no other questions on Kiwi, we will jump into the question on Euro Pound. Who was that? Oh, was that you too, D? Ah, gotcha. It says, I know you don't like it. It's not that I don't necessarily. It has nothing to do with the favoritism thing. It's for the opportunities of the way that I trade. The range is very tight and the pivot value is very high. So a highly levered trade on euro pound obviously has larger implications. And with the same respect, if you open up your stops because the ATR is so tight, um, that's going to be a world of hurt if you do take it, just because it's pound pips. But let's take an objective look here. Give me a sec, okay? I haven't actually checked this out in a while. So I think the last time we looked at this was, in fact, the time that we had actually probed right into the 786 retracement. That was 91.91. That comes off the highs that we made during the financial crisis back in 2008, and a long-dated retracement dating to the lows that we made in 2015. Kind of a lesson of what we were just talking about. Remember the downside break of a descending median line formation will see the biggest drop. The same respect, the confirmed upside break of an ascending median line formation, steepest part of the rally. Hey, Eileen, are you in the room? I actually was taking a look at Aussie Kiwi. Remember we were talking about that in the webinar? Remind me to take a look at that actually as well. So this is number 13. We'll do Aussie Kiwi as number 14. Oh, do you want to take a look at Euro Key too? Love the Kiwi crosses these days, huh? Okay, so D, let me ask you this. What are you looking to do here with Euro Pound? Do you have exposure on it? Are you looking for near-term stuff? Are you looking for new opportunities? Because this is what I would say. Personally, I'd be looking for a pullback deeper, just as a result of this. Obviously, the stretch reaction you got off 92 here was pretty big. I mean, that for Euro Pound, I understand it was everything that was happening, yeah, and all the remarks and yada, 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 flash crash, right? But you stretched into 92.22 or so. You closed that session, back at 90. Big pullback, exhaustion play. Again on the attempt, quickly reversed. It wasn't an outside day reversal, but it was a reversal day. And on the momentum structure, even on like a 2-hour chart here at 120-minute, you've been marking some pretty strong divergence. Okay? Series of higher highs, higher high, higher high, higher high, series of lower highs. So I do think there's sort of exhaustion profile has been emerging here. You have a momentum trigger on the daily chart, which I think if it breaks specifically below 70 here, you do get a pullback. What would be the play though, D? I'm not sure. Oh, D says I'm short from 90.50. Okay, so right around this region, huh? Okay. Yeah, I mean, I just don't have enough price action having materialized up here to give you any levels of conviction. I mean, I hate to use this, but I just want to see what it looks like. Nah. So this is what I would say. It looks like you're actually in a near-term consolidation here right off the highs. I know it's only a couple of reference points on the resistance barrier, so I'm not going to really stress that, but look where support comes in. So you have actually the weekly open converging on a basic trendline support here, which obviously has gotten multiple tags. So that's a little bit more of an affirmed support level than it is necessarily on the resistance side. But we already have that major key level highlighted. Weekly high comes in at 137. So let me mark that up for you. It does look exhausted, D. I agree with you. But just because a trade looks exhausted at the price level you were looking for, you kind of still want to see near-term price, the action in near-term price itself also reflect that exhaustion. So this is the first indication, the veracity of the pullback, that would suggest, yeah, let's start to look for it. Momentum, sure, starting to also show that same type of play. But you're still in overbought. And remember that false, preaching that you see out online and everyone who's teaching technical analysis. This is not necessarily a bearish reading just because it's an overbought. We need to come back from that condition, right? I can show you a million times where momentum has stayed in overbought for days or even months before it's turned over. So I don't want to start to fight and try to, hold a balloon underwater, as it's called. That being said, look for support near 90. That's kind of my near-term bullish invalidation level. And the whole objective of being able to identify these types of consolidation patterns, guys, is because it's a measured move. Okay, so from a tech analysis standpoint, you would take a retracement. Typically, you would take this, but I don't like using those stretch highs. So as a conservative approach, you could take a measured move of this range. Okay. And when you measure up that range, it gives you targets of down here on a downside break into 86.65, which is basically at the monthly open. That's 618 retracement. Okay, that's this region here. So again, reflects this key region. On a topside breach, again, on a more conservative measured approach of this break, would give you a target up at 93.76. So that's sort of why we would look to play these consolidation formations. Again, I don't really have too much faith on this resistance line. So those are levels I'd consider near term as a play here. D, I agree with you. It does look exhausted. I agree with you that the momentum signature even looks kind of primed for a little bit more of a pullback, especially if we get this break. Momentum is holding 60 as resistance. That's what you want to see. But just that's sort of the barrier we'd need to get through just to start to even look for confirmation that we've turned. Okay. Also, the weekly objective opening range low comes in at 89.68. Make sense? Got it. Neither do I. I just jumped in frown rates. I mean, hasn't been disproven just yet, D. And again, you're still in the money. I got no problems taking a break-even stop. It's kind of tight, but if you get this break, I think that materializes into a good move. Until you do, just be cautious of that possibility for a near-term breakout. All right, that is Euro Aus number 14. I just wanted to touch on Aussie Key. I know that we were just briefly glanced at it yesterday. Kind of, sparked my interest in it. So I didn't do anything new on it, Eileen, but I was just, the levels we slapped together yesterday in the webinar. Remember that median line formation? Resistance, break, support. Right back into the 2016 Open, and it held as support just now. Now, to be fair, at this point, now that we've gotten that reaction of it, my immediate bullish invalidation level is right back at this low. Okay? Why? Because we've used this pivot on this slope really, really well over the last 2 weeks. And a break below there would certainly suggest you look for a move right back into the weekly open. That's like 106 essentially. As long as we stay above this, you're still looking for that possible stretch into those slopes we've been following for well over 3 years now. Same slope. So interesting reaction here. Focus is on this range right here, Eileen. Just keeping an eye on them and or Aussie and Kiwi, my new best friends, Eileen. It's interesting, right? Because yeah, that tends to happen all the time. Throughout different parts of the year, you'll start to gravitate towards certain pairs which are offering a lot more technical clarity, a lot more intraday price action, and especially once you start to see markets turning over, a little bit more risk start to pan out. You saw that big drop in the S&P this week. That's really when we start to get a lot more play on some of these risk-sensitive, quote-unquote, pairs. So Euro Aus is going to be on the menu for me over the next couple of days. Aussie, Kiwi, I'm with you on that, Eileen. Both of those respectively against the dollar as well. Euro Kiwi. There was another question on Euro Kiwi. Here's what that looks like. That's number 15 for this session. Let's see what that's doing here today. Okay, so this is still the same levels, D. No change on that either. The 38.2 retracement caught that high pretty well. If you take this median line and extend it off the highs there, it actually is a really nice catch. So I do like working with this formation. D says 153.50 seems too far to get back into longs now. Yeah, it does. I was just looking at that. 154.57 sound okay? What do you have there at 154.57? Oh, I'm sorry. I'm saying it wrong. 154.75, or you typed it wrong. 154.75. Yeah, that would be my next target, or at least the initial area to start to look for some more support. Give me 2 seconds. Let me take a longer look at this 4-hour chart. Okay. Sorry about that, guys. Just kind of just running on the fly here to see what kind of levels pan out. Don't need that anymore. We'll keep that high. That's right under the weekly opening range, the swing highs that we made earlier in the, or late in the month, in September, I should say, as well as the weekly open, all line up right here at 55.50. That's near-term support. Yeah, 54.83, 54.70 region. That's kind of heading into like next week, though, is in timing is where I'd start to look if we break to the downside here. Yeah, I do think you're at risk for a little bit more of a setback. So see the daily chart here? We actually did get a trigger break. Okay, this is a 3.1, 2, 3, 4-point trigger break that finally gave out, and momentum. And again, when this happens is important, not just that it happens. You can get kind of trigger breaks like this all the time, but if price is not at a sensitive area or a technically significant area, it doesn't mean anything. The fact that we actually got that break on the onset of the spike into the 38.2 retracement, which again represents a bunch of long-term slopes, as well as the ascending formation that we're in with the snapback here. Yeah, I'd be looking for a little bit of setback. 54.75, 54.80 does look like an area of interest for me. And that's the open of U.S. trade that you hear there behind me. It's also a 38.2 retracement. Okay, so this is what I would say. Keep this chart in view. Whoops. I'd say bullish invalidation is down here. That same level that we were just talking about, sorry, earlier in the week, D. If it gets below 53 95 specifically. At that point, I think you see a much steeper correction to Euro Oz. But as long as you stay above that, I am looking for a dip to buy. Yeah, I think there's a lot more upside room to go, largely speaking, for Euro Key. On the broader time frame, guys, I think we're making some major turns here. So something I'm definitely interested in. If you're looking for a longer term duration move, you'd be looking for that deeper cutback first into 53.95. But I do like it. Okay, thanks. I can wait till next week. No need to jump in. I got it. I took a snapshot. Great on. Great. Right on. Guys, we're going to go ahead and wrap things up here for the week. If there are no other questions, I want to thank for everyone who made it out today. Again, remember, on Monday, we're on a public forum on Daily FX. And we'll be back here on Tuesday, Wednesday, and Thursday of next week. Till then, best of luck trading, guys, and have a great weekend. Cheers.